My name is Matthew Todd, and welcome to Inside the Scale Up. This is the podcast for founders and executives in tech looking to make an impact and learn from their peers within the tech business. We lift the lid on tech businesses, interviewing leaders and following their journey from startup to scale up and beyond, covering everything from developing product market fit, funding and fundraising models to value proposition structure and growth marketing. We learn from their journey so that you can understand how they really work, the failures, the successes, the lessons along the way, so that you can take their learnings and apply them within your own startup or scale up and join the ever-growing list of high-growth UK SaaS businesses. Hey, and welcome back to the podcast. Really pleased to be joined today by Manoj Versani, CEO, founder of Hammock. Great to have you here.
Thank you for having me, Matthew.
Should we kick things off with a brief intro? Just tell our audience a little bit about yourself and your background. I know you've got a lot going on, but a brief intro first if we can.
Yeah, sure. So I come from a technical background. So I used to be a CTO prior to starting Hammock. I am also a landlord as well. So the idea came from my own pain points, essentially. And then one day I decided to just take the punt and actually try and build a company and start Hammock. And I think I've always knew I wanted to become an entrepreneur. It's just a matter of finding the right idea, essentially.
I see. So it was your own experience, pain points, then that led you to seeing if this could be a viable business.
Exactly. Yeah. 100%.
Yeah. So what were some of those pain points that you noticed, and what was out there at the moment, if anything, to try and address those? How were people dealing with them before Hammock?
Yeah, so with landlords in particular, so most landlords are part-time, like myself, and we use letting agents to manage the properties, and we use accountants to file the taxes. But every year, we have to do our bookkeeping, we have to prepare our taxes, we have to collate all of our receipts, track all our transactions. And if you want to grow the portfolio, or if you want to do simple monitoring of our properties and assets, it's all manual on spreadsheets. So you literally download bank statements, put them into spreadsheets, and then create formulas, like even simple stuff like knowing how much money each property makes.
Yeah.
You have to put it into a spreadsheet, which is a bit backwards if you think about the day and age we live in. So you have mobile apps for your stocks and shares, and you have mobile apps for your banking, but your asset that is the biggest class that you might own as a landlord, you don't have a mobile app to check what's going on. So that's kind of where the premise came from. Yeah,
I see. And with that in mind, then, what was the view of what that initial product could be, and were you testing that with yourself? Were you testing that with other landlords that you knew as well? How did you go about that?
Yeah, so it started off with my own hypothesis. I love testing theories, and I think a good founder should always start with assumptions and hypothesis, which you need to prove, even if it is something you experience as your own pain point. The question you need to ask yourself is, do 1 million people experience this pain point, or is there a significant market share that actually share the same pain point as you? So with that in mind, I started building it out, building a few features based on assumptions, and then starting bringing in people I don't know, actually, to see if they can test it, and start doing a discovery phase with them, asking them questions, getting their feedback on the early version of the MVP as quickly as possible. So just bringing customers right to the forefront of it, and make sure you're not building a small company which only solves your own problems, essentially.
Yeah, absolutely. I think there's a lot to be said. We've had other founders on the podcast as well talk about the value in getting early feedback from people that you don't know, because the people that you do know will probably have some kind of bias, or might not want to offend you, or want to try and say the right thing, but you're going to get honest feedback from strangers.
Yeah, or you get the opposite as well from the people that do know you, just might give you negative feedback in general, right? So
I guess doubtful whether a business could work, maybe because they haven't gone down that path.
Yeah, it works both ways, but 100%. I think best way to do is just speak to random people. that are in your customer segment.
Feature-wise, then how has that developed from what you went out the gate with?
It developed quite significantly. So one thing I was a little bit naive in is assuming that the core functionality that we built was fit for purpose for all types of landlords. Essentially, there's actually many different types of landlords, and they've got small nuances as well. So a lot of that feedback came from customers. So whether it be HMOs or renting the properties through Airbnb, short-term tenancies, long-term tenancies, people paying weekly or daily instead of people will assume rent is just paid once a month. There's tenants out there who pay weekly. Tenants pay out there every 6 months. So we had to create a lot of rules and a lot of features to have that flexibility essentially. So it's evolved quite a bit, Hammock has, and it's still evolving all the time. And it's about catering for small landlords as big as large landlords, and then bear in mind, you can have all the features in there because the larger landlords want all these things. But if you're a small landlord logging into the platform, you might think, oh, this is massively overcomplicated.
Yeah.
Because they've got 100 features.
Yeah, no, absolutely. I think there's a lot to be said for not just allowing anyone to do anything and everything with a platform, but you very much got to take ownership of their experience, and the experience of different types of users should be different.
Exactly, yeah. And I think it's probably an oversight of most founders. I certainly was a little bit naive in that area.
Yeah. And in terms of your own learning, then generally coming from a technical background, lots of SaaS businesses are started by technical founders, many aren't as well. But there's always the challenge of knowing how to build something can be quite different to knowing how to build a business around something. So how have you found those other areas of the business outside of the technical side?
Yeah, I think I was quite fortunate in my career that I was a bit more of a commercial CTO.
Yeah.
So I stopped coding a long time ago and focused more on taking the board's vision and turn them into tangible deliverables. So I got heavily involved on the marketing side, sales side, and building up the first product teams, which is kind of the key ingredients of a CEO is having that bridge between the commercial and having that bridge with the technical as well. So I was quite fortunate that I got a lot of exposure on that side. So I found I actually love uncertainty as well. So I work best under uncertainty. Sounds a bit weird thing to say, but with uncertainty, you have to fight or flight, right? So, and I think startups is all about uncertainty. And I think as a CTO, it gave me the right foundation to take someone's idea and try and build that into a product.
Yeah.
And then again, if you think about if you work for a large corporate or even other startups I have worked in, they come up with new ideas, and we still don't know if this idea is going to work. It might be a sister product or a different product for a different segment. Yeah. So I've got a lot of learning experience from that. The area that I'll probably say that was a bit of a learning curve for me was definitely the sales of actually customer support. So that side was probably my weakest area. Building the customer support teams and building strong sales teams. That's probably my area of weakness, I'll say.
Yeah. Were you doing a lot of the early sales yourself, I assume, and then building a team? At what point did they come into the journey?
Yeah, so I started doing the early sales myself and customer support myself, and that teaches you a lot, and you learn a lot from that as well. And then at some point, I think it was 10 months in, we started recruiting customer support people, onboarding people. And I think we started very early on recruiting those people. I think it helped us really long term, massively. I think the best salespeople are the ones that know the product inside out, always are. And I always find that even today, at the size of our company, after 4 years, when the internal team, when they've got questions or they want to know ins and out of our product, it could be the salesperson, they're always anchored back to key individuals in the company who've been in the longest, essentially, because we know the product.
No, that's good insight and interesting to say what you were saying about you're building a team early on in the journey. And what has that growth journey looked like? I know you've also been successful in fundraising as well, so it'd be good to understand at what point in that journey that came in as well.
Yeah, so in terms of team-wise, we've last year we doubled our team size. So we only had 9 people for about 3 years at its peak. We've now got over 20 people now. And it's deliberate to keep the team quite we could have 40 people if we wanted to, but I'm a big believer of lean practices. And you tend to make a lot more mistakes when you start hiring fast and growing too fast as well, right? Even with us going from 10 to 20 people, I've spotted gaps, internal processes, mistakes that we're making now. So I think, imagine doing 50 to 100 people. It is, there's a lot of moving parts, and getting that right for me was the most important thing. All anchors down to culture as well.
Yeah. So how did you find that whole kind of early hiring resourcing perspective, and a lot of changes in a startup's life cycle as you go through those different step changes in team size, right? You suddenly go from doing it all yourself to having people responsible for it to having people managing people. It's a number of different changes in that culture. How have you found an approach to that?
Yeah, so I think my advice would be for most founders is go to people that you trust first thing. So if you're recruiting, is there anyone in your network that you trust and that can do that skill job? So that's what I did. So I think nearly half the company have worked with me before. Okay. So I started hiring people that I've worked with in the past that I've really, really enjoyed working with, and we work really well together. Started bringing in expertise in my circle of trust, essentially. And then I started, if I didn't have anyone in my circle, I'd then ask my circle if they have anyone in their circle that they recommend. So I always try to go through word of mouth or people that I know, essentially. And then last hurdle is going through recruitment agencies or graduate agencies, etc. But I always try to recruit from people that I know. And that's worked really well for us.
Yeah. And are you all physically co-located in the same place? Are you distributed? How do you run that?
So we're all distributed, actually. Around probably about 6-7 of us are in the London office, and the rest of the company works from home. Yep. We've got about 5 people up north, Manchester, Sheffield, Cheshire, and then we've got someone in Wales, and then Midlands. So we're kind of scattered, to be honest, but about 6-7 of us in London.
Yeah. Okay. And have you found culture-wise, that has worked for you having that kind of hybrid approach, I guess you can call it?
Yeah, I think we always had a hybrid approach from the beginning, but I think it's a lot easier to do hybrid working when you've worked with them in the past as well. Yeah. And that makes a big difference, I think. Whereas, it might be a bit difficult when you're recruiting new people. Because I think there's definitely a learning curve for anyone new coming into your sector or your startup. And then especially the background, if they're not worked with a startup before, it's very, very different to the corporate world. Yeah. But when we recruit new people, if they are remote based, we get them in the office for 1 to 2 weeks. Okay. To do a crash course into the company, try and get them embedded into the culture as quickly as possible. And then we try to get them in on a regular basis, maybe once a month or twice a month to really get them embedded. Yeah, and then we partner them up with someone in the company as well, like a buddying system, essentially. I see.
Yeah, no, that sounds like a really smart approach that, blends that remote time, if you like, and physically remote time anyway.
In the tech world, I think even prior to the pandemic, a lot of people in tech are used to working hybrid working and remote working. In my previous jobs, I always had remote work as an option as well. So I think it's in the tech space is quite common actually, I'd say.
Yeah, I think it's certainly more advanced than in other sectors, but I think even within that, I think there are many different opinions and perspectives and many different things people have found to work. But it's interesting to hear different guests' perspectives on what they've implemented, how they've done it, and how they've been able to, take ownership of the company culture with whatever setup they've got.
Yeah.
Yeah, we kind of touched on briefly the fundraising earlier. Can you talk us through kind of what fundraising you've been through so far?
Yeah, so we've done a pre-seed, which came from Founders Factory and Fuel Ventures and Ascension Ventures and then a few angels.
Yeah.
And that was close enough to £1 million. And we done another raise after that, which was like a bridge round of £1 million as well.
Yeah.
And then after that, we raised just shy of 5 million last year, essentially. So we've done 3 rounds.
Yeah.
I'll say we're probably like our last round. I'll probably call it our seed round or late stage seed, really, to be honest. Just because where we were, our stages were at our company. We were very fortunate in our fundraising. I say fortunate is because for whatever bizarre reason, whenever we closed our round, there was some sort of massive economic impact just after we closed it. So the first one was the pandemic. So literally we closed our round in Feb and then the lockdown happened in March.
Yeah.
Second round, the bridge, same thing happened. We closed our round and another lockdown happened. And then the third one, obviously, with the whole economic downturn last year, was the Ukraine-Russian war. That literally happened just after we closed our round. So we've been fortunate in three fundraising rounds that we managed to close our round just in time.
I guess things, well, it's not impossible. Certainly did become more difficult for different types of businesses to fundraise than, disrupted, if nothing else. It sounds like, you were pretty lucky with the timing of those.
Yeah, we were,
Yeah, so, why go down the fundraise route? What, for other founders listening, what has that enabled you to do and continue to allow you to achieve with Hammock?
In terms of like fundraising versus like bootstrapping, or
fundraising versus bootstrapping, or just generally your strategy for how much you've decided to raise at those different points? What was the thinking behind those raises?
Yeah, it's a really good question. I think it all comes down to what type of business you want to build. And what I mean by that is it's perfectly fine to build a business which is a lifestyle business.
Yeah.
But it's also perfectly fine to build a business that you want it to be, a massive brand or a large company, and you want to build a huge company. You want to build this company to a huge brand, which is, you want to go in the UK or you want to go global. So I think there's different types of businesses and there's different types of personas of how you want to manage business. For me personally, I wanted to build a company which, I want Hammock to be the app which all landlords have and beyond UK, also in other different markets as well.
Yeah.
In order to even attempt to try and achieve that dream, we had to rely on VC money. Trying to bootstrap something like that was very, very difficult. And because we wanted to get those, shall we say, mass markets, we've priced our product for scalability. It's all about high volume of customers as opposed to low volume of customers and high price.
Yeah.
So I think all of those things play a factor, what type of money you need. So getting the right money is, and deciding what is the right type of money is really worthwhile. Investing the time and research into deciding what is the right smart money to get. So for us, VC money was probably the best type of money for us to get. In order to us to go out and try all these different things with our products and tackle all this different uncertainty. I think also what we were trying to do is niche, and also there's a lot of uncertainty, like no one else was doing what we were doing.
Yeah.
Whereas if you're trying to build a business and there's competitors involved already, and you're like piggy bank, trying to like mirror their products and build some different unique points around that, I think maybe VC money might not be required, or you could bootstrap it, or because it's a proven market, for example. Whereas what we were doing was completely unproven.
Yeah, so because you were trying to create something, innovative, differentiated from what was out in the market at the moment, then it sounds like you prioritized market share, speed to market with a robust product, and therefore investment and pricing strategy both playing into that approach.
Exactly, yeah, 100%. And then KPIs, the metrics that VCs after is all relative to our ambition as well, right? So
So you've got investors then that are fully bought into that vision of Hammock being the platform for landlords.
100%, yeah. So fundraising is really, really difficult. Although we've done 3 very successful rounds, it's by far the hardest thing that I've ever done from a career perspective. It is soul destroying fundraising. It really is. It's quite difficult. It really is difficult. It's relentless. So going back to your points earlier, actually, like what were the difficult things coming from a technical background? Actually, fundraising is a different game altogether.
Yeah, and absolutely. And what were some of the difficult bits, the challenges there? I can imagine there are a few different types, but other founders, thinking of embarking on a fundraising process. Yeah, what are some of those struggles that they're likely to face?
Yeah, so I think fundraising, especially if you're doing it for the first time, you're obviously, it's very exciting to do it the first time around, right? You're pumped to get your story up, you get your deck up, and you really believe in this company. That's why you're working on it, and you love what you do. I certainly love what I do. And then you start knocking on the doors of VCs and different investors, and then they start asking questions, tearing down your ideas, or saying they don't believe in the vision, or they don't believe the market's big enough, and those first few no's, they're hard to get your head around. And depending on what type of personality you have, it can be difficult to take a no.
Yeah,
I mean, it's always difficult to take a no, to be honest, but it's how you take those no's and then turn them into yeses for future rounds is what's probably the critical part.
Yeah.
So taking notes and lessons learned from the investors is really, really important. And also what's really, really important is targeting the right type of investors as well.
I see.
Yeah.
Is that by industry, by ambition, by size?
Yes, definitely by industry is, I'll say, is like the no-brainer. Like if you're a fintech, go for fintech VCs first, and then go for generalist VCs. There's no point pitching to a healthcare VC, for example, if you're a fintech. And then by size is definitely really important. Like everyone wants a tier 1 VC or tier 2 VCs. So prioritize, you might want to prioritize those if you want to do that, but you got to be realistic in terms of where your company is and what stage you're at before you start approaching them.
Yeah.
And then going after, you might want to decide if you're an EIS investable company, then you can go after EIS funds, VCs, small VCs, big VCs. I think getting that shortlist down to the ones you really want to target and then get it right is really, really important. And then you get better quality discussions as well.
Yeah, absolutely. And in terms of the lessons learned, a couple of things come to mind. How did you differentiate between an investor that just didn't get it, didn't believe in it, from their own personal perspective, versus feedback that you actually then needed to take and iterate into a change in the way you pitch, next time round to a different investor?
Yeah, I think that's a really good point, because the target segment we go after as Hammock is landlords, obviously.
Yeah.
And it's not a surprise. A lot of the VCs we spoke to invested in property as well, and some of them were landlords.
Yeah.
And then they always put themselves in their shoes and like think about Hammock afterwards. And then so they'll say, I don't need Hammock. I've got my accountant. I got this and that. And, they put themselves in the shoes, and that's what happened. First one of the VCs, and then I wasn't really quite prepared for that. And then afterwards, I prepared myself. Okay, if a VC says that, and the honest answer to that question is there is a particular type of landlord that's going to use us, right?
Yeah.
And frankly speaking, the super rich or someone that's extremely wealthy, they have IFAs, they have other people, they have teams around them are managing their property on their behalf. So it might not be the actual individual themselves that's using Hammock, but it might be some other person in their team, or it might be the IFA using Hammock instead, or the bookkeeper using Hammock instead. So I then tailored my answer around just that piece, for example, when speaking with VCs. Other feedback will be around go-to-market or about the vision, how big is it. I used to then get more concrete evidence around the market size.
Yeah.
I used to send them research papers that we'd written ourselves around the market size with credible sources. So bring that up in the meeting as well to question the market size. And there's common questions that will always come up is, market size, the size of the opportunity, and how big it is. So have those, write your own thesis essentially, and have that ready to hand.
Yeah, and it sounds like a properly researched thesis as well, rather than what I have unfortunately seen some do, which is a quick Google says 30 million people that have could fall into this category, therefore that's my market, therefore I'm going to be a billionaire in a year's time.
Yeah, exactly. Yeah. So what I did is I actually paid like Statista, for example, bought an annual account, started doing going into the different charts and different research points that they have, then dived into the sources that they link to and read those reports, and then you can start comparing your TAM. And your SAM, and that's what I did as part of my research paper. I started building it out based on credible sources, essentially.
Yeah, and obviously when you are, pitching to VCs, you effectively have a business. Then you've got two types of customers, right? You've got the landlords, and then you've got the investors that you're trying to sell to effectively, as well. I guess, how do you make sure that is all in alignment and that you're not getting dragged off course, and that the ambition that you hold true almost remains intact? Because I've seen some founders almost get taken off of course based on different investors, and they end up kind of waving around, taking quite a slow path or potentially the wrong path that's less valuable ultimately overall.
Yeah, I think when speaking to investors, it also depends on who you're speaking to in that VC firm. So if you're speaking to a partner or you're speaking to a graduate, someone that's early in the career, the quality of the conversation will change significantly. If you're speaking to someone that's been working in that firm for 10 years or 5 years, or just been in the VC space, the quality of conversation is going to be a lot stronger and better.
Yeah.
I think also to the first 3 rounds, like your pre-seed, your seed, even Series A, I think as a company, you're still trying to establish proper product market fit and trying to get scalability. So at that point, I strongly believe VC should be looking at not whether this idea is good, but whether the founder can execute the idea.
Yeah.
So what I started doing was kind of like sharing my story and why I'm the best person to execute this idea.
I see.
In the fundraising pitches. And that kind of made a big difference in how far I went into the process with the different VCs. I think at this stage, certainly the stage we were at, it's all about the founders. And I think VCs need to be taking bets on the founders, because, everyone's heard the saying ideas are cheap, essentially.
Yeah.
Right? Anyone can come up with an idea. It's how, are you the right person to execute it? And I think if you're fundraising, that's probably the most important thing you need to focus on is convincing them you are the best person and your company is the best team to execute that idea and vision.
Yeah, absolutely. I think that's really, really good advice. And I think, my personal opinion is if you're going into that investment pitch situation and you're looking for basically for that money to buy your way into like the ability to execute because you've got a gap already, then that's going to make you less investable. Solve those problems yourself first.
Yeah, 100%. And you need to convince the VCs you can handle uncertainty.
Yeah.
And you're comfortable with uncertainty, because that's the world of startups, right? So, I think the first 3 rounds, the VCs are just backing the founders. Certainly the good VCs, I'd say.
Yeah.
Like if VCs are looking at metrics and not looking at the founders themselves, I think that's probably a mistake. But I think most VCs are looking at the founders and the team. Are they the right team to execute the idea?
Yeah, absolutely. So, in terms of growth and scaling Hammock, now that you've been running Hammock for 4 years, what does that look like now? How are you scaling in the UK internationally? What does that look like?
I've always believed the principles of lean startup practices, and I think many founders do actually. And when it comes to scaling and international expansion, I think the same principles apply. How can you test this hypothesis abroad without spending millions of pounds? And so, and little money as possible, and getting the learning as fast as possible. And for me, that was through partnerships. So trying to find partners in the US, Canada, trying to find partners in Australia and different countries, essentially. Who operate in our space, the landlord space, but offering different services. So all of a sudden, we have access to their pool of landlords from abroad, and we can then use their customers for the discovery phase of the customer analysis, and to try and figure out what their pain points are in that country, because the setup we operate in is heavily regulated in different countries. Lots of different types of regulation: tenant regulation, housing regulation, landlord regulation, property, safety. There's so many regulations, and even FCA regulations for open banking and payments. So it's really, really important to get those assumptions right. So for me, it's about partnerships going abroad, and also partnerships in the UK as well. So the best way to scale for us personally was through partnerships. And because you get access to pools of customers through a partnership instead.
Absolutely. I would encourage any SaaS founder to evaluate partnerships as an acquisition strategy, like you say, because it's a one-to-many rather than a lot of work to acquire one new customer at a time. So look for those genuine partnerships where it's mutually beneficial.
Yeah, and also, actually, you just reminded me, like, the customers that come to you directly, to Hammock, all right, the conversion rate is much higher.
Okay.
Right. And the reason it's much higher is because they've actively gone for searching for a solution. Whereas if you go to mass market and you're trying to promote through ads and stuff like that, the conversion rate is obviously going to be lower. But they're not actively looking for a solution. So then the challenge there is actually how do we let them know what they don't know, right? So what's available. But I do find it quite fascinating, all these data points, and looking at the source of the customer, where they come from, and why they're using us. But
absolutely. I think it's always good to have that analytical approach. It's only going to help strengthen the business, optimize the business, and keep it lean, as you say, in terms of a strategy as well. And I think it's interesting what you were saying, a minute ago about regulations as well, and that differing between different countries and different types of regulations they're impacted by. I think whilst it's certainly, I can imagine, very challenging to address those, I think if you do, it certainly puts your business in an extremely strong position because it's going to be harder to disrupt what you do because of that barrier.
Yeah, 100%. And I think also in the UK, there's a barrier to entry, and that barrier to entry is understanding the different regulations that landlords have to deal with in the UK alone, which puts us in a very good place.
Yeah, I know many people that have thought about, going into property, becoming a landlord, and have been, certainly put off by not understanding what their responsibilities are, scared of that, scared of hidden costs, and, hearing different advice from different people. And it's not always obvious to people how they should proceed.
Yeah.
So it's good to hear that you're kind of helping educate those people, as well as provide the platform that is obviously going to facilitate all of that as well.
Yeah, 100%. I think, and also the product will evolve through the customer demands, and the customer demands come from their own pain points or sometimes regulation changes.
Yeah. And generally, in terms of property investment, what's your perspective on how you see things panning out? Are there any kind of significant changes with the current economic or regulation changes, as we talk at the beginning of 2023?
Yeah, so I mean, property is it's all over the news right now. So rent prices are going up. So unfortunately, the last 6 or 7 years, the regulation changes that come up by the government have had really negative consequences for tenants, unfortunately, because we as a country don't develop enough properties to build new homes.
Yeah,
we have a massive supply and demand issue in the UK, and have done, and it's getting worse. So landlords are selling up. So there's a portion of the small landlords are starting to sell up because of regulation changes and difficulties. What that means is there's less properties available to rent, essentially. And of course, that means rent prices are going up. And so you tackle that together with the cost of living, it's a recipe for disaster.
Yeah.
So I think kind of that's where the trends are going. The smaller landlords are selling up, and the bigger landlords tend to be the ones buying in more. I would say some of the regulations have been positive, like professionalizing some of the landlords and hopefully removing the bad landlords out there. There's obviously bad landlords as well as good landlords. And that's the purpose of some of these regulations.
Yeah.
So that's a really good and encouraging sign. But I think it's very difficult to predict property. There's always people always say there's going to be a crash, or there's going to be property's not a good time to invest. But I'll be honest with you, if you compare the property index and the FTSE 250 index, property's always won, and it has been for 60, 70 years. If there is a crash, it'll come back up and rise again, because there isn't. It's all about supply and demand. There just isn't enough homes. So I think there's never a bad time to buy a home or buy a home to rent out. I think personally, if you can afford to get on the ladder and you want to get on the ladder, get on the ladder, because house prices will come down, but they'll always go back up again. It's my personal opinion.
Yeah, I think you've got to ask yourself whether you're in there for some short-term gain or if you're in it for a longer period of time. And the trends, as you say, are always positive if the latter scenario is the case. Yeah, no, absolutely. No, really interesting to get your perspective on that side of things as well, definitely. I think we talked about quite a few interesting points. We've taken up a bit of time, but before we do wrap things up, are there any other lessons that you'd have or insights you want to get across to other founders listening to the episode today?
Yeah, so I'd say that when we were quite small, had 9 employees, everyone essentially reported into me then.
Yeah.
And then we started growing the company into 20 plus people, and then we started having a little bit of line management areas, and because we did a big round as well.
Yeah.
We're focused on growth, and one of the things that I've learned is even after 8 months of all that all happened in 8 months, I then started going back into the processes again, and I discovered a load of things which I assumed wouldn't happen.
Okay.
Did happen. Bad things like people weren't communicating properly with the different teams when they thought they were. I thought they were, but they weren't. Things were done. There was a lot of admin work being done by people, and they were just doing it, and they didn't speak up and say, "This is rubbish admin. We shouldn't be doing this." So as the team starts growing and scaling, as a founder, go back into it quicker. So I did it after 8 months. I wish I did it after 3 months, to be honest.
Yeah.
Because there's a lot of positive wins to come out of the changes that are coming on the back of that now. So for those founders who are scaling and growing, try to revisit the detail yourself. So literally, I did an audit of every single department, and I discovered so many things that I didn't think I would discover in just 8 months. It was mind blowing for me, actually. Other thing is about resilience. You just got to keep going. Honestly, it is really, even with money raised, it's still a tough market out there. Trying to win the customers, trying new things. You've got to keep experimenting. You've got to keep knocking on doors of customers. If you're fundraising, you've got to keep knocking on doors of VCs. I think for each round, on average, I spent about 200 VCs.
Wow.
It's a relentless process. It's not easy, and it's not meant to be easy. You're taking someone else's money and getting them to invest in your vision. So it's not meant to be easy.
No, I think that's really, really good advice. I think there's some really interesting points on resilience and uncertainty, kind of two words that have kind of been a bit of a common theme, I think, through our discussion this morning. So no, thank you for taking the time. I think it's going to be a lot that founders listening to this can take away, whether they're early on or whether they're into that scaling phase. And I like those insights you just gave from making sure you do circle back and dive into the detail. I think that'll be a good point for many people listening at that phase to do that. So yeah, thank you again for taking the time, and wish you the best with the expansion of Hammock, and look forward to hearing how that goes.
Thanks again for having me.
Thank you for joining me on this episode of Inside the Scale Up. Remember, for the show notes and in-depth resources from today's guest, you can find these on the website insidethescaleup.com. You can also leave feedback on today's episode, as well as suggest guests and companies you'd like to hear from. Thank you for listening.